Good morning, welcome to CupO'Forex. This is David Frank with your daily video analysis for Tuesday, the 2nd of December. And welcome this morning. We've already had an interesting start for today. Just released was the Reserve Bank of Australia. They had their interest rate decision today. They left interest rates steady. There's a lot more speculation going on, not only within the bank itself, but with investors of when they're going to have a rate change. More and more that's coming up, and they decided once again the whole rate steady, i.e., pretty much because of problems with the housing market, that they feel that there's still a bubble forming, and they're not too happy with the overall strength of the Australian dollar, which we'll talk about when we do our technical analysis in a little bit. Also coming out this morning at 8 a.m. GMT, Spain will release its unemployment change. This is the number of unemployed people being added to the economy. We expect this number to come in a little lower than last month. Last month we had nearly 80,000 new unemployed people added to the roster. It came in at 79.20 thousand. This month we're expecting it to come at 21.3. That's a little bit lower. We'll have to wait and see if that actually comes to fruition. I think it's going to come in a little bit higher, in the 30s or 40s. We'll see what happens. Also coming out of England today at around 9:30 GMT, we get some more housing numbers. We have PMI construction and mortgage approvals coming out. We'll be watching these to see the health of the housing sector within the British economy. We're expecting the PMI construction to come in a little bit lower than last month at 61. So we'll be watching this a little bit closely. Also coming out today at 3 p.m. GMT time is some housing data outside the United States. We're getting construction spending month on month. This is an interesting number to watch. Last month it contracted by minus 0.4%. We're expecting that to recover the entire contraction, plus make up a little bit, come in at 0.5%. We'll be seeing if that happens today as well. Also coming out today out of Australia later this evening at around 10:30 p.m. The AIG Performance Services Index, that'll be coming out. We expect that number out of Australia to stay within contraction of 43.60. Let's take a look at some technical analysis today. Like I said, I'd like to take a look at the AUD dollar and see what's going on there, as well as our favorite yellow metal, gold. Okay, let's get started with the Australian dollar. The Aussie dollar to United States dollar forex currency pair. Still remaining quite bearish at this currency pair. We're still oscillating very heavily around the 85 handle, and we've been doing this for quite some time now without any strength to the upside. Let's take a look at something here. You can see the 55-day moving average, where we failed, and we're still in a medium-term bearish channel. We haven't really broken out of it yet, and until that happens, I'm going to stay, relatively cautious here and to the downside. And as I said, we're still around 85 until we have a daily break and close above this level. Shooting higher to resistance levels, I just don't see happening right now. Ideally, we need a break above the upper level of the bearish tunnel to really start moving. And today, that's around 87.940, 87.950, that area there, before I would even think of restructuring to bullish. I want to take a look at the 4-hour chart and see what happened after the rate decision from the Australian Reserve Bank. As you can see here, we shot immediately above 85 as we saw immediate support for the Aussie dollar. I don't think that's going to be long-lived, and we'll shoot back down to the 85 handle where we've been oscillating for quite some time. As you can see here, I think we are stuck in a consolidative pattern from a low of at around 84.20 in that area there, up until just above 85.10, and we'll have to see where that goes. I also want to take a look at gold today. Gold started falling after we formed a rising wedge pattern that we can see here. Here is the key handle of 1200. Yesterday we shot above that level, and that should be a a bullish indicator. We went as high as about 1221.25. Now you can see a bearish engulfing trying to form here. This is not confirmed yet. We need a daily close lower. Should that happen, we'll shoot back below 1200. I think we're going to stay between two technical levels. One between 1200 and the other 1131.64 for quite some time. And that the recovery right now doesn't have legs to really move higher. As you can see here on the 4-hour chart, sellers are starting to come back in. Should we have a close lower, that'll confirm the bearish engulfing candlestick forming here. If not, it's starting to look like a hanging man formation. But right now it's a bearish engulfing. Should we close lower, then we're going to move back below 1200 and get stuck behind the consolidated range that we've had for the last few days. Alright, that takes care of today's video analysis. Check again with us tomorrow. Have a wonderful day trading.